The top 5 mortgage myths debunked. Myth number 1, you need 20% down to buy a house. You haven't needed 20% down in years. So you have 4 different loan types. You have a conventional loan, which can go down to as little as a 3% down payment. You have an FHA loan, which can go down to a 3.5% down payment. And then you have 2, a VA and a USDA loan, which both can be 0% down payment loans. If you're sitting there waiting, thinking that you need 20% down to buy a house, you do not. Myth 2, your credit score either doesn't hurt you very much or that you need perfect credit to be able to buy a house. That is not true. It is true that the better your credit score is, the better interest rate you're probably going to get on your loan and more mortgage programs are open to you. But most lenders have a threshold of 620 as their low for their credit score. So if your credit score is 620 and above, you can get pre-approved if you have good income almost anywhere to buy a house. Myth 3 is that a pre-qualification is the same as pre-approved. A pre-qualification means that you've verbally verified all your information, you've given in a mortgage application, and you've kind of checked it. A pre-approval means that you've actually turned in all your supporting documentation, you've turned in your W-2s, your bank statements, you've turned in your tax returns if applicable, and you've gotten all the way to an underwriter and they have conditionally approved that file. That is a significantly stronger piece of documentation is to be pre-approved as opposed to being pre-qualified. Myth 4, that interest rate is the most important part of your mortgage. It's not. There's many other factors that are very important that go into your mortgage. It could be the term of your loan. How long do you plan on living there? It could be your down payment. Do you have a bunch of money? Did you just come into an inheritance? Like maybe the down payment is a bigger option for you than what your interest rate is. Do you not have any money? Do you not have as much money to put down a 3.5% down payment? See, that's a way bigger factor than what your interest rate is. If you don't have the down payment money that you need to get into the house, it could be a 30% interest rate. You still don't qualify. And then myth 5, once you're pre-approved for a mortgage, you're good to go. That is not true. Once you're pre-approved or conditionally approved for your mortgage, does not by any means mean that you're clear to close and that you're going to be able to move in your house. Because you're pre-approved doesn't mean that you can go buy a car. Do not go rack up credit card bills. That could ruin your pre-approval. There's stuff that you could do in the mortgage process after you've been pre-approved that can ruin your chances for buying a house. So that's it. That's the top 5 mortgage myths debunked that drive me crazy. If you thought that this was a beneficial video to you, please like the video, share the video to anybody that you think is looking to buy a house or maybe would benefit from the information.